Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Paris Rapeseed. Now, the markets moved back up in January whilst making new higher prices still had some issues. The closes were the ones to watch, and they all closed as I had back in late November last year, below the important March 2023 high at 540 3/4. All this action turned out to be a triple top, with the January high itself being a horn top, and we subsequently moved lower. 9 weeks ago, prices were once again held up by the medium moving average, currently at 504 1/4, but with changeover we had a big gapping move lower. Originally, the gap was 490 to 509 3/4. Now, this was not the largest gap that I've seen here in this market, but it was useful enough, such that prices opened after it below the long moving average, currently at 495, and below two important supports, what were then the significant February 2024 to date uptrend, since reassigned lower, that's currently at 453 1/4, and also the neckline extension, currently 488 1/4, of the April to August 2024 head and shoulders top. Plus, back then, just above the bright green neckline extension of the August to September 2024 reverse head and shoulders bottom, currently at 479 1/4, which last week we were testing, but from above. Anyway, back then, in early through to late February, prices started to recover upwards and tried filling in the large gap overhead, which they very nearly did. However, despite moving up over the long moving average, the market over late February stalled and ended up forming a small double top, and what turned out to be a larger mid-January through to mid-March bearish half hesitation, dropping down 4 weeks ago, down through the primary and secondary targets with a small double top, and 2 weeks ago also reaching the target zone below for the bearish halfway hesitation. Now, for the earlier triple top idea, I said 5 weeks ago that, and I quote, "This pattern, though not a very pretty one, does give some potential targets below of a primary target down at 480 even, and a secondary harder to reach target X1 down at 458 even." Now, the move lower down to the 481 3/4 area had just about reached the primary target zone down at 480 even, enough for me to consider it reached, end of quote. I can add to this that 3 weeks ago prices continued the move lower, reaching the secondary target X1 at 458. 2 weeks ago we even tried lower on the Monday, but just after forming a hammer pattern that day, a pattern traditionally seen as a bullish reversal pattern. We saw a swift and somewhat remarkable recovery after that, such that this week prices have reached up to just underneath the flatlining long moving average, currently at 495, and around the bright green neckline extension. So what has all this quote large activity left us with? Well, there is the possibility that the whole February to date action could be a bullish diving board pattern, an almost complete bullish diving board pattern. You see, we've had the approach during February, then the plunge during early March, and now the recovery and progress from mid-March until now. This move should see a further recovery over the long moving average and the hesitation between there and the medium moving average further up, and that's currently at 504 1/4, before in due course another move higher. Now, this is what this pattern looks like right now, and I'll amend it or retire it completely if another pattern emerges. But for now, I've drawn a very acute mid-March to date based uptrend, currently at 482 1/2, to help guide such a view. I'm of course willing to finesse this line higher or lower as the market demands it. Winnipeg Canola. From November last year until February this year, the market started, for the most part, a 3 steps up and 2 steps down action, gradually moving higher. This overall action higher left us with an important December 24 to early March 25 ascending wedge pattern. 5 Fridays ago, the market closed below the lower trend line for the first time and started the resultant move lower from this pattern, accelerating the fall with a gapping changeover between 634 even down to 615 even, which this week was finally covered. For this original move lower, I laid out primary, secondary and even a tertiary target. All of them were reached, and the market was seemingly stopped by a combination of the lows at 567 even, 571.80 and the reverse, and 575 even, plus the neckline extension currently at 562.20 of the April to June 2023 reverse head and shoulders continuation pattern. I'd possibly also throw in the September 2024 low and pipe bottom at 553.5 and the October 2020 high at 552.80. We didn't reach all of these, but the proximity and market actions on approach to these suggest a swift and immediate pullback up for prices higher. However, the recovery higher, though dramatic, has been nowhere as high as we've seen elsewhere in other oilseeds and vegetable oil markets. For instance, there is no weekly key reversal or even the lesser outside week opportunity here. The initial reason I gave was because we had the previously mentioned 50% absolute Fibonacci line overhead back then at 606, and this seemed to put off significant attempts higher. However, as I have said last week, and I quote, the action over the last 3 weeks, so that is now 4 weeks, does suggest the construction, or at least hints at the possible construction of an ascending wedge pattern, possibly even an ascending triangle. We shall see on that, but it's worth paying attention to it if we do go down this route. End of the quote. Well, prices shot up through the 50% absolute Fibonacci line on Friday last week and hesitated for the most part of this week in between the moving average congestion at 629.60. Between 625.20 to 633.50. That is also based around the 2021 low at 629.60. Today prices have pushed higher still. Now there is the possibility here for the pattern since the start of February being a possible bullish diving board pattern as we've seen in Paris Rapeseed. However, the pattern here is very, very crude, with the run-in during February not looking very straightforward in my eyes. The plunge in early March looks good, but the recovery higher in late March looks indecisive at the start, though we've since become more determined. However, we still have a way to go. Up in between the June 2021 low at 655.90 and the February high at 682.20 to achieve and then start the hesitation. It still seems that Winnipeg canola is the laggard in the oilseeds and veg oil markets right now. Bursa Malaysia crude palm oil. I said here 25 weeks ago, and I quote, of all the oilseeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in September, that's September last year, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April. So that's April last year. End of quote. So things have developed since then, but a good place to start is to look at those earlier patterns highlighted so many weeks ago. The first of these patterns is the bright red neckline, currently at 44.65 of the September to November 2023 reverse head and shoulders pattern, which I've highlighted repeatedly and which even during March supported the market. We are today just above it. Next, and this one I also commented on many times previously, is the dark blue neckline, currently at 44.83 of the September 2015 to November 2017 head and shoulders top. I had not been sure about this one in the past, but it is an old one, a super old one that had been way below the current market, back in the day, but similarly to the bright red neckline, had in recent weeks significantly supported the market, even if it was imperfectly. Please continue to bear both of these in mind as we go forward. The third pattern here is the very slowly rising gold long moving average, currently at 43.81. That stopped the market's fall dead in mid-January, and it did so again last week. This moving average has truly acted as a base for the rise in prices in 2025. There are other newer and more closer to the market features to watch out for. And to start with, I'd look to how the market has dipped into the wide congestion zone between 44.08 to 45.59, and how we are back within it again today, within this congestion zone. Well, within this congestion zone, we have the old March 2008 previous all-time high at 44.84, as well as the April 24 high at 45.27, and the June 22 low at 45.59. Now, this congestion zone helped hold up prices as recently as last week, and I suppose even today. Next, 7 weeks ago, I outlined the mid-August 2024 to mid-January 2025 bullish Andrews pitchfork, which 3 weeks ago I finessed into the shallower bright green bullish shift pitchfork that you see on my daily chart today for the same move. Now, last week prices dipped below the lower time, currently at 44.45, but we failed to stabilize below it, and we are today back up over the lower time. I had last week this pattern on notice of retirement. Well, it's not so this week. Finally, last week I drew a mid-February to early March nascent, mildly bearish shift pitchfork, highlighted in pink on my daily chart. A more acute bearish Andrews pitchfork with this move does not work, so it is very much this pattern or the highway, retiring it completely, which I'm quite prepared to do, but not yet. So far, this pattern has been working very well. I would even go as far as extraordinarily well right now, though that is no guarantee at all if it will last or not. This week we have seen the market move up and then shy away from the overhead upper time, currently at 46.86. Though this upper time is also coincident with the slowly declining medium moving average, currently at 46.87. This is interesting, as only last week we saw prices try down to the lower time below, which is currently 43.44, which was back then coincident with the slowly rising gold long moving average, currently 43.81. So we've had this week on the top side being tested with the upper time and the medium moving average, and last week the lower time being tested with the gold long moving average. I think for now I'd pay some special close attention to this pink bearish shift pitchfork, as it seems to be capturing the current market quite well, and keep a close eye on it.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.